Let's do final trades, Aaron. Save me.
So my final trade is the banks going into bank earnings, which is going to really kick off at the end of next week. I think that the banks have underperformed. If you look at positioning and you look at net sentiment, positioning right now amongst the banks is the most negative it's been in 8 years. And when you look at the discount relative to the S&P 500, it's trading at the most discounted level relative to the S&P 500 in about the same time frame. I like the banks because although I do think that this quarter is likely to be choppy, you still have a lot of restructuring, a lot of write-offs, one-time write-offs that you may see, which are going to impact fundamental earnings.
Right.
When you look forward into 2020, I do think, particularly in the second half of the year, the outlook looks a little bit better. Look, NIMs are going to continue to be compressed because
net interest margin.
Right, net interest margin and margins overall are going to continue to be under pressure given the outlook for rates. That said, we could start to see some earnings growth come through on the loan side, and I do expect to see loans picking up as we move throughout the year,
all right.
And that's why I'm more bullish.
Even though yesterday, Cramer talking about the setup going into earnings being tough for the banks, just given what they've done lately. What do you got for me?
Google Alphabet. Look, the momentum trade is alive and well, and I'm playing it until it stops.
All right. Dance until the music stops.
Yeah, look, honestly, it could stop on Monday, but right now it's alive.
Those are dangerous words. Josh Brown.
Uber. I bought it in the middle of December. It's up about 15.5% year to date. And as it starts working out for me, I start to think about maybe turning that trade into an investment.
All right. Good stuff. Thank you,
Baidu. Traded that one today, bought it. Unusual activity.